Hello traders, welcome to the LFB and our global video charting review. This is the review for the currency and dollar index on Tuesday, the 17th of May 2011. My name's Mark O'Haig from the LFB Trade Desk. We do ask that you pause the video and read the disclaimer before moving forward. Looking at the headlines, latest currency headlines are still monitoring the strong dollar. US administration jawboning and the ability to back that talk with action. Trade desk updates have called for consolidation at support above 72.50 on the dollar index, and it's way above that at the moment, but also to monitor resistance at 76.50 very closely. That's an area that we could be pushing up to this week. The exchange traded funds, the ETFs that track dollar index movement, are UUP, Unicorn Papa, which is a dollar bullish fund, and UDN, Uniform Delta November, which is the dollar bearish fund. Major global currencies are trading in mixed fashion against the dollar, with all currencies now beholden on a daily basis to whatever energy and momentum hits on global equity and commodity trade. Any existing US dollar based position should be closely monitored this week while recent price action is absorbed, as new long dollar signals were trying to form late last week in reaction to intraday collapses in S&P 500 values. And take a look at the technical review of the dollar index, and we're going to watch the near-term charts, 30-minute and 1-hour charts on the dollar index and the major currencies, just to see where near-term momentum is trading. These charts are proprietary, they are from the LFB Trade Desk, and they form a part of the daily subscription, trade alerts, market momentums, and videos that are produced by the trade team each day. Interesting to look at this dollar index futures chart. We've got an upside trend. You can see the trend line that's going on here. We do have a technical upside trend line that's holding, waiting for the third bounce, a great linear channel. But take a look at the signals on this 1-hour chart. For every long signal during the course of a session, there's been enough momentum and sentiment change to generate a short signal. So for the 3 long signals that you've got on a 1-hour chart, there are matching 3 short signals. And the reason for that is the dollar index is still overall in a very strong short trend. So if you are looking to buy the dollar at this point in time, for whatever reasoning you have, technical or fundamental, whatever that may be, got to be very much aware that these long breaks are getting reversed completely before they go again. So you're getting a long break, complete reversal to the entry price, a long break, a complete reversal to the entry price, and then go again. Because however strong that looks, the breakout point of 75.20 was hit 3 times before we're able to move 60 or 70 ticks higher on the dollar index. But near term, we are looking at a bullish index. Mid-term, we're looking at just going into consolidation of a short mode, and long term, we're in a very strong short trend. Wouldn't be surprised to start to see some heavy dollar selling if 76.50 can't get taken out as resistance and the index to move quickly through. If we do not break quickly through 76.50, we will be looking for the dollar index to pull back. This is a euro dollar chart, which is an inverse, an upside down dollar index chart. And as we can see, as the dollar index was going up with the trend line as support, euro's going down with the trend line as resistance. But the same as the index, same as the dollar index, for as many short signals intraday, there is a matching long signal. Volatility is rife, and in reality, since the maybe 10th, 11th of May, we really haven't gone too far outside of initial bang, bang, bang drops that are reversed, consolidation, and then go again. But that's an ugly way of putting something on, because at this point in time, these markets are very beholden to the movement in the news headlines. These are not markets that are moving strongly because of technical or fundamental reasons. These are all down to the hedging of the US dollar manipulation by the Federal Reserve, and also then reaction to breaking news headlines regionally. We saw it again today. This is the Great British Pound. UK inflationary letter and data was out today, and that created strong volatility in the Great British Pound. Sideways chop, really. We do have a trend line that's formed that will be difficult to break. We've got two touches of it. We need a third one to confirm. Either this is going to drop lower again or break higher, but we need this third break at 62.50. Over the years, we've seen 62.50 as a very strong area of trade on the Great British Pound, and we've also got the 50-day moving average sitting in here as well. So at this point in time, not an awful lot to take from the Great British Pound technical chart. Australian dollar looks very similar to the euro. We are in short mode. We are tracking with very choppy and overlapping feels and looks to these charts, and it's very, very difficult to look to sell the Australian dollar in the mid to long term when you've got such a strong interest rate differential between Australia and the major currency pairs. So at this point in time, we are looking for consolidation of the Australian dollar at these rates, but wouldn't be surprised at all to see us back up towards the 10900 sooner rather than later. Looking at the dollar Swiss, very, very choppy. This reflects the interest rate markets. Both dollar Swiss and dollar yen are used on a daily basis for interest rate hedging, and we can see very, very difficult to determine where your entry and exit points would be on that particular pair. And dollar yen looks very much the same. Very choppy, very overlapping. Fair values being found, nothing wrong with that. But what took, for example, a whole Asian session to build from 80.70, and then the European session to break from 81.20 to 81.80 has just been given up in a 30-minute period of trade since the 8:30 news release. And dollar CAD, looking at the Canadian dollar, in an upwards trend of dollar strength, US dollar against the Canadian, looks very, very similar to the dollar index view, looks very similar to the inverted euro chart, but again, very choppy, very overlapping, not a lot of clear-cut action at that point in dollar CAD, and we are trading at the 100-day moving average. The path of least resistance, if equity and commodity markets can find support, will definitely be a break shorter. To go on the short side of dollar CAD if equities and commodities can hold support. If equities and commodities find buyers, we will very quickly get dollar CAD back down towards the 95 area, down below the 20-day simple moving average. However, if equity markets do move lower and gold and silver and oil move lower, dollar CAD's going to take out this 100-day moving average and we'll use it as an area of support. That wraps up our review of the dollar index and currency markets for the 17th of May. If you do want further detail on your memberships, either to extend or to renew, if you go to the LFB website on services, you can look at the options that you have for updating your membership. The technical reviews, just to remind you, they are proprietary and we do ask that they're not shared.